Auctions are getting better and better as the weeks go on. According to CoreLogic, there was about 1,800 properties auctioned across Australia's capital cities over the weekend, returning a clearance rate of 77%. That's the highest preliminary clearance rate since the week ending March the 1st. So the market has continued to improve, particularly Melbourne. There was about 600 homes auctioned in Melbourne this weekend, up from 500 the weekend before. The clearance rate in Melbourne is about 76%, and that's despite the Melbourne Cup. Usually in the week leading up to the Melbourne Cup, numbers of properties up for auction do decrease, but that didn't happen this time. So the market is getting more confident in Melbourne. Sydney is still doing well. About 860 homes auctioned in Sydney over the weekend, up from 700 the week prior. Preliminary clearance rate in Sydney is about 80%, which puts it up there as one of the best performing markets in the country at the moment. But it's a good sign, Danica. The property market keeps getting better week in, week out.
Yeah, that's excellent news, Ed. Good to hear. Now, Westpac will release its full-year profit results shortly. What can we expect?
We can expect Westpac's profit to be significantly lower in this full year, much like ANZ's profits, which were released last week. Its profit was cut 42% to $3.7 billion. We can expect Westpac to fall as well. A week ago, Westpac said its cash earnings would be $1.2 billion lower due to write-downs, higher customer compensation and a record AUSTRAC penalty. They've agreed to pay AUSTRAC $1.3 billion in settlements. 6 months ago, Westpac did not pay a dividend. Investors are going to be hoping today that they do announce they're going to restart their dividend program, and there's speculation that it will be about 25 cents per share. And our business editor, Tiki Fullerton, will be speaking to the Chief Executive of Westpac, Peter King, a little bit later today.
Now, a big one tomorrow. The Reserve Bank is expected to cut the cash rate to a new record low. What other things, Ed, can it do to stimulate the economy?
They're expected to really increase quantitative easing. So the market is pricing in an interest rate cut from 0.25% down to 0.1% tomorrow. And they're widely expected to increase the amount of quantitative easing for the economy. What that means is the RBA is going to purchase more government bonds. That pushes down borrowing rates and increases the supply of money. In theory, it should encourage people to spend more money, get more money back into the economy. It is also meant to push down the value of the Australian dollar, which is great for our exporters. So tomorrow is the last Reserve Bank board meeting of the year, and there won't be another one until February.
The last and a very important one. And just finally, Ed, what is the local stock market expected to do today?
Local markets expected to jump today about 0.9%. It had a really tough week last week. The market shed about 4% in value, so it's pretty standard for the index to bounce back after making a big loss. The thing to watch today will be technology stocks. They had a tough week in America. Really bad day of trading on Friday. It was one of the worst days of the year. So it'd be interesting to see how our technology stocks react, but the market is tipped to go up today.